A very good morning to all of you, and welcome to the eighth episode of the ASEAN in Practice podcast series. My name is Dennis Hu, and I'm a senior research fellow at the Center on Asia and Globalization at the Lee Kuan Yew School of Public Policy, National University of Singapore. Today, we'll be talking about U.S. trade policy under President Trump and its implications on Southeast Asia. To help us understand what's going on, we are very fortunate today to have a very experienced trade specialist, Mr. Stephen Olson, on this show. Stephen Olson, friends call him Steve, friends like me, currently a visiting fellow at the Singapore-based Institute of Southeast Asian Studies, Yusuf-Ishak Institute. He is also a visiting lecturer and non-resident fellow at the Clayton Yotta Institute of International Trade and Finance. Over the course of his more than 30-year international career, Stephen has lived and worked in Asia, the Middle East, and the United States, holding senior executive positions in the private sector, government, research institutions, and academia. He is a recognized expert on international trade, economics, and business issues. Steve began his career in Washington, D.C. as a U.S. trade negotiator. He is a member of the World Economic Forum's Global Futures Council on Trade, and he co-leads a joint work stream with the World Economic Forum's GFC Global Futures Council on Geopolitics. Steve is also an adjunct professor at the George Mason University Schar School of Policy and Government and lectures in Beijing, China at the Capital University of Economics and Business as part of a joint program. Steve, welcome to the show.
Thanks, Dennis. It's great to be with you, but I have to say, when you read my bio like that, it reminds me how old I am.
Same here. We've got a long career, both of us.
Okay, so I thought we'd do a quick update on
Yes.
our podcast and to talk a little bit about um, this whole sort of flurry of sort of new tariffs that's been announced by
Yes.
President Trump, his so-called Liberation Day on the 2nd of April. And I think it's kind of divided into two components. One is kind of a baseline 10% increase in tariffs. And the second one is really sort of reciprocal tariffs to almost 60 countries, right? Including, I think, all of Southeast Asian countries, right? And of course, the hardest hit, I believe, is Cambodia, Laos, Vietnam, so all over 40%. I think Singapore is kind of the baseline, 10%. And then sometime, I believe it was on the 9th of April, he sort of made another announcement saying that there's going to be a 90-day grace period. So the 10% baseline holds, but the reciprocal tariffs will be put on hold for 90 days, I believe, right? And then I think a couple of days later, he made some announcements again about some exemptions on certain things. I think he included laptops and a few other products. So it's all very confusing and it's almost a bit chaotic. And so, Steve, how do you see all this sort of playing out?
Sure.
And two, what are the implications on Southeast Asian economies and the global economy in general?
Well, look, Dennis, I think you used the correct two words. Confusing and chaotic are definitely a good description of where we are today. But having said that, I really see only 2 to 3 ways ultimately this can play out, and unfortunately, none of them are good. In the first instance, I think it's very likely that we're going to see at least some of these countries successfully negotiate quote unquote deals with Trump to get out from under the reciprocal tariffs. No one should celebrate that. That is not good news because at that point, Trump has essentially transformed trade relationships from relationships built on mutual respect and mutual benefit to something somewhat akin to an organized crime protection racket, in which the principle is you must pay to avoid paying. When we're dealing with gangsters, it means shopkeepers pay money to avoid having their stores burned down. And when we're dealing with Trump and his reciprocal tariffs, it means you must offer concessions in order to avoid these draconian tariffs. Now, there's a couple of different problems with this. Whether we're talking about Trump or whether we're talking about gangsters, you can be assured that the price will always continue to rise. It'll never be over. And the other question I would pose to any of these countries seeking agreements with Trump is, have you seen any evidence that Donald Trump is willing and capable of abiding by any trade agreements that he signed? because frankly, I haven't seen that evidence. So if we do end up, as I expect we will, seeing at least some countries negotiating these agreements, I don't think that that's good news, and I don't think that that's going to end well. Now, a second option would be for countries to really stand up to Trump and punch back hard. And certainly, this is the path that China has gone down. The European Union has already indicated a very robust retaliation list if their negotiations don't succeed. So we know at least some large trade partners, large economies, will take this approach. Now the problem here is once we start going down this road of tit for tat retaliation, we literally don't know where it will end. And I think the results could end up being significantly worse than the very damaging global trade war of the 1930s. Keep in mind, in the 1930s, that was a trade war fought almost entirely with tariffs. In this instance, we've already got indications that countries are going to move well beyond tariffs. So China, for instance, is adding U.S. companies to its unreliable entity list, sort of a de facto blacklist, and is also restricting U.S. access to critical materials. The EU looks like it's going to use its anti-coercion instrument in order to go after U.S. services, an area where the United States actually has a surplus. So once we start going down this road of tit for tat retaliation, I don't think that's going to end well. Now, a third potential option, at least, and I think this is for the countries that find themselves now at the lower end of that spectrum, that sort of 10% baseline tariff. Some countries might just decide, let's keep our head down, let's ride out the storm. Now that might be plausible, but the one word of caution that I would give to these countries is do not do not anticipate that just because you're at 10% today, that 10% could turn into 20%, 30%, 40% in the future if Trump doesn't seem to get what he wants. And that's a possibility, further increasing the reciprocal tariffs that is explicitly provided for in the executive order on the reciprocal tariffs. So as I said, I see only a handful of ways this can play out, and unfortunately, none of them are particularly good. Now, in terms of how this will play out and what this will mean for Southeast Asia, I'd take a step back and I would look at the bigger picture. And from my point of view, the bigger picture here is that what we're seeing play out now could potentially end up being the collapse of the rules-based global trading system. Now, it would be unfair to blame all of this on Trump. The system was already in bad shape, was already on wobbly legs long before Trump arrived on the scene. But like a boxer who's already absorbed a number of punches to the head, I fear that Trump could be the knockout punch for that rules-based global trade system. Now, I'd never say that any system is perfect, but I think we have to acknowledge that this system has been a primary driver of economic growth and development around the world, but especially in ASEAN for 8 decades. And if that system is now going to start to fall apart, that's going to have very bad implications for the small trade-dependent economies of Southeast Asia. So I think for the region, I think we're looking at some pretty grim prospects here.
So let me just follow up on that point. So what should ASEAN do? Should they try to step up on their own economic integration process, the ASEAN Economic Community, or they should perhaps move closer to China? They do have with other member countries this very mega free trade agreement, RCEP.
Yeah.
So what should ASEAN
Yeah.
do?
Well, look, it saddens me to say this, but I think ASEAN and any other country or region in the world for that matter, moving forward for at least the foreseeable future, has to regard the United States as an unreliable partner. I think we're in for another almost 4 years of chaos under Donald Trump. And so I think you've got to get serious about diversifying your trade, investment, and economic relationships away from the United States. I think that almost by definition, that means integrating even more closely both within the region and also with China. Now, I should point out there's one potential complication when it comes to ASEAN integrating more closely with China, and that is China's got a lot of excess industrial capacity that otherwise would have ended up in the United States. Those products are now not going to end up in the United States. And I think there's a reasonable chance a good portion of those will end up in ASEAN. And we've already seen a number of ASEAN countries expressing concerns about dumping from China, launching anti-dumping investigations leading to potential tariffs. So while there'll be an impetus for ASEAN to work more closely with China, it could come against the backdrop of rising antagonisms with China over the prospect for dumped products entering into ASEAN and damaging local producers. So the picture, I think, is a little bit more nuanced there.
I guess the other concern, of course, with nearshoring or bringing back many of these operations is that it might increase production, operation costs, and ultimately that could be inflationary. I know a lot of people are talking about, rising inflation in the US because of that. So that's something you're worried about too?
I don't think there's any question that, and this, goes back to Trump 1.0 and also resulting from the pandemic and the war in Ukraine, where I think we see the pendulum of global trade swinging back more in the direction of security and supply. Previously, it was all about globalization. It was all about economic efficiencies. It was all about produce your product in the most cost efficient way, even if that meant a highly extended global supply chain spread out around the world. I think the Trump protectionism, I think the pandemic, I think the war in Ukraine has opened people's eyes that maybe we allowed that pendulum to swing a little bit too far in the direction of economic efficiencies and lower costs. And now for all of these reasons, I think we're seeing sort of a macro trend where we're now going to see that pendulum swing back in the direction of ensuring security of supply. Now, while there will be benefits associated with improving security of supply, I don't think there's any question, as your question alluded to, that it's going to increase costs and fuel inflationary pressures. And then when you roll on top of that, the different tariffs that are going to be applied in different points along the supply chain, I just don't see any scenario under which we escape inflation. And I think the only question is how severe.
Well, back to this region, how do you see the implications on ASEAN as an economic bloc? As you know, ASEAN is trying to forge closer economic integration among its 10 member states and soon to be 11. And to achieve the ASEAN Economic Community, I think they're coming out with a new strategic plan post 2025. How do you see that having an impact on the various efforts, including the FTAs? I mean, ASEAN has bilateral FTAs with its dialogue partners. It also has regional free trade agreements like RCEP, and you can also include CPTPP. Quite a number of ASEAN member states are members of that too. So how do you see that evolving and changing?
I think there's a real potential silver lining to all the dark clouds that are on the trade horizon right now. And I think it provides ASEAN with a real impetus to take its regional integration to the next level. Yes, we understand that there are free trade agreements, there is the ASEAN Economic Community, but we also understand that these agreements still leave a lot of restrictions, a lot of barriers in place. I think this is a real opportunity for the region to sort of redouble their efforts to regional integration and further trade and investment liberalization. In terms of more broadly, some of these regional trade agreements that you've mentioned, I think there's an opportunity there too for CPTPP and for RCEP. And I say that because as Trump's approach to trade continues to further decimate the rules-based global trading system, I think there's a real opportunity for some of these regional trade agreements to become safe harbors. And for countries that continue to believe in free trade, continue to believe in rules-based trade and a reduction rather than an increase in barriers, I think agreements like CPTPP and RCEP could potentially become more attractive. So my advice to the countries the member countries of both of those agreements would be to raise your ambition level, to really think about expanding your membership and deepening the rules contained, because as Trump's trade actions continue to be a broadside against the multilateral global system, I think the relevance of CPTPP and RCEP could be increased.
So if this trade war is going to escalate and it's going to be pretty extensive, how is this going to play on the global economy? We've been watching the news. I mean, the Dow Jones and the US stock markets have fallen quite significantly over the last couple of days, and there's a lot of uncertainties, there's a lot of concerns, that maybe too much concerns about the fact that the US economy might go into a recession. Who knows? I think it's a bit too early to tell. But how do you see all this playing out? What's the worst case scenario over the next couple of years?
It's interesting that you mentioned the financial markets, because I think actually that might be one of the few remaining guardrails on some of Trump's more extreme trade policy. He pays attention to the markets, and to the extent there's a severe and a prolonged downturn in the market that can be attributed to some of his trade policies, I think that might be one thing that causes him to perhaps rethink some of these policies. On a global basis, I think you're right. I don't think there's any question that we're moving into an increasingly fragmented global economy. And as I alluded to earlier, I think that this rules-based global trade system, which was put in place at the end of the Second World War and has been a primary driver of economic development and growth throughout the world, I think we could really start to see the unraveling of that system accelerate. And I think especially in Southeast Asia, because so many of the countries of this region owe their remarkable economic development to that rules-based system, to a progressive decrease in trade and investment restrictions. And if that system really starts to wobble and really starts to unravel, I think that's going to have very significant negative impacts, especially on the small trade-dependent economies of East Asia.
Yeah, Steve, I'm based on my own work experience, many years in APEC. I'm a strong believer in the multilateral trading system. And if that breaks down, as you said, one of the biggest losers will be the less developed countries, the less developed economies, because in a way, the poorest of these countries in the world may not be able to have the opportunity or the capacity to join various kinds of free trade agreements, right? So that's one of the concerns. You might see that fragmentation and the inequality actually widening over the coming years.
It's so true. And sort of as a personal side note, I think it's a common human experience that we take things for granted and then we only miss them when they're gone. And I think that's what we're going to find with the global trade system. I think we've sort of taken it for granted. And if it does unravel, as it could in the worst case scenario, we're really going to miss it. And for all the flaws that the system has, and the flaws have been significant, we got away from law of the jungle. We got away from might makes right. We got away from the big fish eating the little fish. Under a rules-based system, a country the size of Thailand could challenge an unfair trade practice by the United States in the WTO, win that case, and then see the United States remove that practice. That's a wonderful, wonderful benefit. And even if we start to tilt even somewhat back in the direction of that old law of the jungle system, I think it's going to be real bad news for a lot of countries in the region.
Steve, I mean, you mentioned earlier also about security, and we know that economic security is very much an integral part of national security. The trouble is when it's an overemphasis on national security, it does, particularly in this region, it creates a lot of ill will, distrust among member states. It could unravel decades of cooperation, regional cooperation, security cooperation, economic cooperation among ASEAN member states. So one of the biggest concern, of course, is that as we move forward in terms of the ASEAN economic community, depending on how the global economy turns out, the concern is that national priorities may override regional ones, and then you get that division among member states when what they should be doing is doubling down on economic integration as a way to protect themselves, to be more resilient against some of the challenges that we're going to be facing. That's really it for me, Steve. Thanks so much for taking the time today to speak with us. From this podcast session, we have certainly learned a lot about how U.S. trade policy actions under President Trump could impact Southeast Asia, as well as ASEAN's own efforts to forge closer economic trade and economic integration, and how they can try to adjust many of these trends and challenges. Thank you again, Steve, for taking part in this podcast episode, and I hope that all of you will look forward to the coming episodes ahead. Thanks.
Hi everyone, I've just added a postscript that since this podcast was recorded, the United States and China have announced a temporary easing of trade tensions, agreeing to a 90-day reprieve on tariffs. As part of this deal, the US will scale back its proposed tariffs on Chinese imports from 145% to 30%, while China will reduce their tariffs down to the US baseline reciprocal tariffs of 10%. While this development may offer a short-term breather for global markets, it does little to resolve the underlying strategic tensions or restore confidence in a stable rules-based international trading system. The risk to the global economy remains acute, and there is no guarantee that a deeper economic slowdown can be averted. We just have to wait and see. We will continue to monitor these fast-moving trade developments and return with an updated discussion in a future podcast episode. Many thanks.